Hello traders, it's Sunday evening, April 9th, and it's time for the Sunday night video. We're going to take a look at our last couple of picks. We're going to review the market action. We're going to figure out what we feel the market's going to do in the week ahead. Then we're going to find a couple of picks that we'll be able to trade. First, let's start with our last two picks, Lilly. And I've been giving you a long and a short because we're focused on very short-term trading. So we have to wait for these trades to set up. We're primarily focusing on day trading because I don't know what the market is going to do right now. And that's okay. As a trader, there are going to be times when your market forecast is neutral. And I'm fairly confident in that neutral forecast. I believe the market is going to stay in a range for quite a while. So I have to adjust my trading and act accordingly. Lilly was the long that I showed you, and I put a video out Wednesday, and you can see how the stock continued to move higher on Wednesday. And then Thursday, the last trading day of the week, you can see how the stock pushed higher. Tesla was the short that I showed you. Let's do a quick review on this because I had also shown you a week ago, Sunday night. I said, hey, I like Tesla on the long side. Why did I like it on the long side? And then Thursday I came out and said, hey, you know what? This is actually looking like it's going to be a better short. Well, when you get into price points where you have potential breakouts, oftentimes we will see a fake breakout. Here's what got me excited about it last Sunday night. We have this high minus trend line coming into play, and we have a nice breakout here. This is a longer than normal candle. It had a very tiny wick and a very tiny tail, and it had heavy volume. This is how we like to break through trend lines. Typically, this type of breakout is going to gain follow through, and we're looking to get to that 200-day moving average. What happened Monday was that the stock never took out that prior high. So there was never an opportunity to even get long Tesla because the first moment that you turn your screen on Monday morning, the stock is down and it never looks back. Well, it didn't have the relative strength, and you can see how the open of this key bar failed. That's your first support, and we closed below it. We also closed below this downward sloping high minus trend line. So it was a breakout. Now we're back below it. That trend line is representing resistance. And that's another important thing to keep in mind. Everyone always wants to think in terms of breakout, breakout, breakout when you draw trend lines, but in essence, they're showing us support and resistance levels. And those levels typically stay intact unless we get nice long candles like this. But when they fail immediately, now this is actually a resistance point, and we're starting to see some of these buyers get flushed out on the backside. Yes, Tesla, I still like that short. I think it's got a chance to get down to that 100-day moving average pretty easily. So watch Tesla. I think it's going to be a short, but we're going to look for another decent short today. Let's take a look at what the market's doing. Boy, we've had a lot of economic news coming out recently. So let's start from the beginning. Last week we had the official PMIs come out from Europe and Asia. They were very soft. Europe in particular, just above the expansion level. Not a lot of activity taking place there right now. And Europe is talking about another 50 basis point rate hike. So those are very soft. Then we got domestic numbers. We had ISM services, ISM manufacturing. Both of those numbers came in weak domestically. Then we had the JOLTS job openings number come out. There were, I believe, about 70 or 80,000 less job openings than projected. Well, that's not good. ADP came out light. They were looking for 225,000 new jobs in March, 145,000 new jobs in the private sector during the month of March. Okay, so that's a soft number. Then we get the initial jobless claims number on Friday. It was around 225,000. That number has been averaging below 200,000 for the entire year so far. So the point is that we're starting to see some of the manufacturing numbers, some of the services numbers come in weak. Also, China, which I consider to be the global growth engine, it's been the global growth engine for the last 2 decades. They were in a COVID shutdown. They came out of the COVID shutdown. So there's a lot of pent up demand. We're expecting this pop, this spike in economic activity. Well, the Caxton PMI came out just above the expansion level, like 50.2. What happened with this pop? This should have been more than a 1 or 2 month pop. So that has me very, very suspicious. And what we saw last week was a fairly substantial sell off in cyclical stocks and industrials in particular. Now the fear is starting to shift to a recession. And the Fed themselves said, we don't know if a soft landing is still in the cards, especially with the credit crisis happening in the banking sector. Credit conditions have tightened for sure. And so they lowered their GDP projections just because of how banks are going to be much more careful in their lending practices right now. Jamie Dimon from JP Morgan Chase came out and said this banking crisis is going to last for many, many months. But to be fair, he also did say this is not anything close to 2008. So he's not overly concerned, and he feels that bank balance sheets are going to be very strong, or that they are much stronger than they were in 2008. We're going to start to see some earnings. JP Morgan Chase posts earnings towards the end of this week. So earnings season is going to kick off. It's dominated by the banking stocks. Banking stocks have been taken behind the shed over the last few weeks, and they have been pounded down. Will they come out with some decent news? Could the financial sector lend a little bit of support to the market? We'll see. That's what everyone's going to be watching. But the big news that's going to come out is the CPI. Everyone's going to be watching to see if inflation is starting to abate at all. So that'll be the big number to watch on Wednesday. From a technical perspective, I don't trust this bounce. Don't trust is different than I'm bearish. It just means that when we have a move like this, off of the low on extremely light volume. There was only one day in there when we had decent volume, and that was a week ago Friday when we had the end of the quarter and some window dressing going on. And so that was just an inflated number. Apart from that, the last 3 weeks, the volume has been horrible. Zoom out just a little bit. The market is in a sideways range right here. Test the upside, the downside, the upside, the downside. I believe we're going to stay in this range. And you can also see that we've got some resistance here. We've got these longer term trend lines coming into play. Zoom out. There is a wedge formation. This is another reason not to be an active swing trader right now. The market is forming a wedge. It could break out either way. So I don't want to be out there selling out of the money bullish put spreads when the market could take out the support level. I don't want to be selling a lot of bearish call spreads either heading into earnings season. It's a really good time to keep your trades short term. Day trade, maybe you've got an overnight swing trade or two, and that's why I'm giving you a long pick each week and a short pick each week. And here's an example of where I believe that resistance is going to hold because the volume has been so light, and I'm not seeing the type of candles that would indicate any excitement on the part of buyers. So when that CPI number comes out and the other news in the next week, I believe that surprise favors the short side for this week. But then I also feel that there's a chance for the bid to recover. We'll test maybe the 50-day, maybe the 100-day moving average, and then the bid recovers towards the end of April when mega cap tech stocks start to release earnings. Tech stocks have been the leaders. They've been the strongest stocks recently, so that's where we really want to look for our strength. So let's go in and let's take a look at a couple of searches. Let's see what we've got. I'm just going to go to green royal flush. It is Easter Sunday, so I'm going to keep this video short. I wanted to make sure that you have my market commentary. So we're going to be looking at Oracle. And I like this compression right here. I like this breakout. I like the volume. We haven't seen volume in the market, but we are seeing volume in this stock, and we're also seeing follow through. Now, I have to temper this pick with commentary. We are day trading. This is not the last train out of town. You do not come in Monday morning and buy Oracle just because Pete said Sunday night Oracle looked pretty good here. If you would have done that with Tesla last week, which opened lower and never traded above that price the rest of the week, you would have taken a loss. What you have to watch for is you have to watch what the market is doing. You have to time your entry. So that's what I'm going to show you right now. I'm going to take off the trend lines so that our chart is less cluttered. And I'm going to take off the SMAs. And we're going to take a look at exactly what happened to Oracle on Thursday and what happened to the market on Thursday and how you should have traded it if you went into the day bullish on Oracle, because that's what you're going to be faced with tomorrow. So put up a 5-minute chart. Lo and behold, the market gaps down a little bit on Thursday, finds support, tails under body, 3 nice stack candles. Okay, this looks pretty good. Didn't quite fill the gap. We have another pullback. Now this looks good. We've got a bullish 1OP cross here. We have a higher low double bottom. We're starting to see some tails here, which tells us that there's support. We've already seen that more than half of the gap was filled instantly. Yeah, this is a pretty good sign. This would be a good entry point for Oracle. So let's take a look at the 5-minute chart. Oracle comes down, establishes support, bounce, 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 bounce. Okay, so while the market is still establishing a support, this stock has actually formed its own support. I'm going to put up the relative strength indicator, 10SI. And if the orange line is above 0, that means that we want to start taking a position. Well, orange line above 0 right here, but the stock is still not above the high of the day. We'd like to see it above the high of the day. We'd like to see it start filling in some of this gap. Okay, so right in here, there we go. Now we've got orange line above 0. We have a nice long green key bar. We have the market making a higher low double bottom. Market's also starting to fill in the remainder of that gap. Yes, at 11:35. Here it's 11:55. So the market's actually found support before the stock did, and it's making its move. This is where you want to buy Oracle, and it keeps its relative strength the entire day. That is what you need to watch for tomorrow if you're going to day trade or even short-term swing trade Oracle from the long side. Wait for that market support. S&P futures after the jobs report on Friday, I believe they're up maybe 4 or 5 points, 6 points. A great big yawner. So there's nothing going to be happening tomorrow on the open. I think we're going to have a flat open. Let the market chop around. Let it find its direction. Wait for that bullish 1OP cross. Wait for some signs that there's momentum. Wait for some consecutive green candles. Once you're confident that the market is going to be moving higher, then you want to watch for that relative strength in Oracle. That is how you should be trading tomorrow morning. You should also be expecting that the light volume that we've seen in the last 3 weeks is going to continue. That means that we have to keep our trades to a minimum. We have to err on the side of caution. So I like that for a long pick. And let's go into our bearish searches, and we're going to go into red royal flush. These stocks have a sell signal across every time frame, from a 5-minute time frame to a daily time frame. And we will take a look at Caterpillar. And the same principle would apply to Caterpillar until the stock is starting to show some relative weakness. Now, mind you, on Friday, we had the market going up, 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 up. The gap is filled. The stock or the market has a nice head of steam. There's no reason to short Caterpillar on Thursday. You had a nice market rally unfolding. Now, if we had a soft market and the market were drifting lower, then we would have an opportunity to short Caterpillar. And what we would be waiting for is a new low of the day and relative weakness. And if you waited for that, you would have a really nice opportunity to short this stock. Let's take a look at the daily chart. We always start with the daily chart. Well, what does that look like? And are there reasons on a daily chart to be bearish Caterpillar? Well, you can see how the stock sold off hard along with the other cyclicals and industrial stocks. You have this nice low plus trend line that's been breached to the downside. There's a low minus that's been breached to the downside, and the 200-day moving average has been breached, and we are testing this other low minus, and we've got relative weakness there. And here's the kicker: heavy volume. I like Caterpillar on the short side. We have to wait for market weakness. So if we start getting through the week, all of a sudden we have a negative reaction to the CPI, whatever catalyst there is to check the bid of the market and to take away some of this fluff, whatever that catalyst is. Remember, this is all light volume. When the market finally starts to show some signs of weakness, Caterpillar is the stock that you want to look for, and you want to see that continued weakness, and you want to see it continue to break down below these support levels on heavy volume with relative weakness. Thanks so much for watching, everyone. Please leave your comments. I promise I'll respond. Have a great evening. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.